While everyone's piling into the same 5 AI stocks, smart investors are scooping up hidden tech companies the media isn't talking about. One's locked in a $9 billion AI backlog, another just 6x earnings, and it's dominating cybersecurity. These 7 secret picks might be the best-kept secrets of 2025. Stick with me to not miss high-growth players. Let me show you. Number 7. Hewlett-Packard Enterprise, ticker HPE. Hewlett-Packard Enterprise. After spinning off from HP Inc. in 2015, HPE focused on enterprise solutions like servers, storage, networking, and hybrid cloud. Fast forward to 2025, and it's become a major player in AI infrastructure. Just last quarter, revenue jumped 17%, their server business rose 30%, and hybrid cloud services grew 11%. A lot of this is being driven by their GreenLake platform, an everything-as-a-service model for enterprise IT. It just passed $2 billion in annual recurring revenue. And the game changer? A growing partnership with NVIDIA. HPE is now delivering plug-and-play AI cloud systems using NVIDIA's GPUs, allowing enterprises to roll out AI capabilities without building data centers from scratch. That said, margins took a hit due to excess inventory and price competitiveness. Plus, a 5% workforce reduction raised eyebrows. But then activist investor Elliott Management stepped in, taking a $1.5 billion stake in the company. Historically, Elliott doesn't just invest, they push management to unlock value. Could this be HPE's breakout moment? But before we move on, here's a quick one for you. If you had to bet on one trend lasting the next 10 years, would it be AI or cloud? Comment your thoughts below. Let's see where the smart money's leaning. Number 6. Dell Technologies, ticker Dell. You know Dell for laptops and monitors, but behind the scenes, it's building the digital backbone of AI. Spun out from EMC and VMware, Dell has evolved into a global powerhouse in infrastructure, data storage, and enterprise services. Right now, it's sitting on a $9 billion AI hardware backlog. That's demand in the pipeline, not just a projection. Dell's AI focus goes far beyond PCs. Their PowerEdge servers, designed for machine learning and deep learning workloads, are being deployed across cloud providers, research institutions, and corporations globally. On the consumer side, Dell is positioned to benefit from the Windows 10 end-of-life event in October 2025. This forces enterprises to upgrade, and Dell's pushing AI-powered PCs as the go-to replacement. Now, the stock trades at just 10 times forward earnings. That's incredibly cheap for a company forecasting 14% EPS growth. The main risk? Volatility in PC demand. But their enterprise business offers stability and scale. Dell may not be flashy, but it's making AI practical and profitable at every level. Number 5. HP Inc. Ticker HPQ. Let's talk about the other HP, the one that sells the laptops, printers, and workstations you see in offices worldwide. While print is still part of its DNA, HP is pivoting into what it calls the AI PC era. In 2024, it unveiled the ZBook Ultra, a sleek workstation built with integrated neural processing units designed to run AI tasks directly on the device. That means smarter conferencing, faster content creation, and more secure workflows without relying on the cloud. HP is also heavily focused on commercial users, where AI features are being seen as a competitive edge. For example, it's bundling real-time translation, voice enhancement, and AI-assisted video capabilities into enterprise packages. Financially, the company's valuation is compelling, just 7 times earnings. Cash flow remains strong, allowing it to continue buybacks and dividend payouts. The concern? Print revenue is flat, and growth is dependent on how quickly the AI PC market materializes. But if the refresh cycle kicks in as expected, HP could ride a multi-year hardware upgrade wave. This might just be one of the cheapest plays on edge AI in the market right now. Number 4. TD Synex. Ticker SNX. TD Synex might be the most important AI company you've never heard of. Formed from the 2021 merger between Tech Data and Synex, the company is now the world's largest IT distributor. It connects tech manufacturers, including NVIDIA, Cisco, Dell, and HPE, to more than 150,000 resellers and customers in over 100 countries. What's exciting? The company's expanding its AI and edge computing services, helping organizations build, deploy, and scale AI workloads globally. And it's not just talk. NVIDIA named TD Synex Global Distributor of the Year 2 years in a row. It's projecting $1.1 billion in free cash flow this year. And despite its massive scale, it's still trading at a forward PE under 12. The catch? Distribution has razor-thin margins, and Synex relies heavily on vendor relationships. A slowdown in IT spending could hit earnings short-term. But for a company that touches nearly every piece of the AI supply chain, TD Synex offers diversified exposure without the high volatility of single-product tech companies. Number 3. United Microelectronics Corporation, ticker UMC. United Microelectronics, or UMC, is the second-largest pure-play foundry in the world after TSMC, but with a very different business model, where TSMC focuses on bleeding-edge nodes like 3 nanometers and 5 nanometers. UMC specializes in mature process technologies, 22 nanometers, 28 nanometers, 40 nanometers. These are the chips used in cars, wearables, appliances, and industrial systems. And as AI moves beyond the data center and into the edge, demand for these chips is skyrocketing. UMC saw a 46% sequential jump in demand for 22 nanometer and 28 nanometer chips in Q1, and it's expanding capacity in Singapore and Japan to meet global demand. Its partnership with Infineon and Bosch gives it solid automotive exposure, an area where AI is becoming critical. Yes, margins dipped recently due to pricing pressure and earthquake-related disruptions in Taiwan, but the company has $3.1 billion in cash, little debt, and a solid dividend yield. If you're looking for a lower-risk, steady-growth chip stock with AI exposure, UMC is one to know. Number 2. OpenText, ticker OTEX. OpenText is a Canadian enterprise software company that's quietly making a name in AI-driven cybersecurity and information management. With over 7,500 enterprise clients, including banks, governments, and defense contractors, OpenText is helping secure some of the most sensitive data on Earth. Their recent platform, Fortify Threat Detect, uses AI to detect and respond to anomalies in real time, and it's fully integrated with Microsoft Azure. The company's also investing heavily in AI search, analytics, and automation through its information management platform. The goal? Help organizations turn data into actionable intelligence while keeping it secure. It trades at just 6.4 times forward earnings and continues to generate strong free cash flow. Management is returning capital to shareholders and maintaining a disciplined acquisition strategy. Growth has slowed slightly, but for a profitable, under-the-radar AI cybersecurity play, OpenText brings strong fundamentals and enterprise-grade reliability. Number 1. Seagate Technology, ticker STX. Last but not least, let's talk about the data layer powering all of AI, storage. And in that space, Seagate is a beast. Founded in 1979, Seagate is a pioneer in hard disk drive technology, but now it's pivoting hard into AI-scale storage, launching 30 to 36 terabyte drives to meet demand from hyperscalers and enterprise AI workloads. In the first quarter, Seagate shipped 140 exabytes of data capacity. For perspective, that's more than YouTube, Facebook, and TikTok generate combined in a quarter. The company recently acquired Intevac's HDD-related assets to ramp up its thin film head production. This tech is key to delivering denser, faster, more cost-effective drives, the kind that large language models and AI systems rely on. Seagate's stock trades under 10 times forward earnings, and with AI data sets expected to grow 10 times over the next 5 years, it's hard to imagine that not benefiting one of the world's leading storage providers. Is Seagate the stealthiest AI winner of 2025? Looking at the numbers, one thing's clear. These aren't just overlooked tech stocks, they're undervalued performers hiding in plain sight. You've got HPE and UMC with gross margins over 30%, Dell pulling in $95 billion in revenue, and Seagate topping the chart with nearly 34% margins and 6.92 earnings per share. Even TD Synex, with its slim margins, is earning $8 a share while moving billions in AI infrastructure. And then there's OpenText, quietly leading in AI-powered cybersecurity with a massive 63% gross margin. Put simply, these companies aren't chasing the AI hype. They're building the foundation, and based on the data, they could offer serious upside in the months ahead. And before you click out, one last thought. Do you think the market's sleeping on value stocks? Or are they cheap for a reason? Drop your take in the comments. I'm curious to see how many of you are still team value in this AI crazy world. And if you're looking for the next NVIDIA, check out these 10 AI stocks want to invest in best semiconductor stocks for 2025. Click on this video here.